Mr. Kannan. I appreciate you joining in, and thank you very much for being here on CNBC TV 18. Well, let's move on to the retail space. A survey by the Retailers Association of India says that sales in March indicate a 12% growth versus pre-pandemic levels, and that retailers are hopeful of quantitative growth, good growth in FY23. To get a check on the return of the retail and the outlook going forward, we are now joined by Kulin Lalbhai, Executive Director, Arvind Fashions, and Nissan Joseph, CEO at Metro Brands. Gentlemen, great to have both of you here. Thank you very much for joining us. Kulin, if I can start with you, could you give us a sense of what you've seen for the quarter ended March? And I mean, how are things looking? We spoke with Raymond last week, who said that demand trends remain extremely robust. Could you give us a sense of how things are looking at, with your business?
Yes, this wave was quite different from the previous COVID waves in that, the recovery was much faster. In fact, only I would think a part of January and the early part of Feb was when there was a clear demand destruction, but the market bounced back very quickly. Possibly the level of fear was much lower. And we saw, as you mentioned, a very healthy March where we have come back as an industry to a good growth level on a pre-COVID base. And I think that momentum continues. There's also quite a few marriage dates in Q1. So I think a lot of drivers for healthy growth and normalcy has definitely returned.
Okay, and you know what? I mean, let's welcome Nissan Joseph, the CEO of Metro Brands, into the discussion as well. I don't know about you folks, but this is a personal observation that whether I like it or not, I have to buy new shoes, because all the old shoes, even storing them in the closets for 2 years, and they're just coming apart. I mean, has that happened to you as well?
I mean, actually, I spoke with a friend recently who complained of the same thing.
And I think with women more so, right? Because of the sheer volume of shoes that you have sort of in your closet. But Mr. Joseph, you tell us, has this pent-up demand kicked in a big way? And how has Q4 been? How are the trends right now?
Sure. Good morning, Sonia. Well, I think, as you know, Q3, we reported some of our best numbers. We had a record-breaking Q3 comparing the history of Metro Brands. And, we've seen that momentum carry forward. We're benefiting no differently than the rest of the retail crowds, as we've seen retail in the country grow, especially in the West. The West has led the way in the way that is what nationally has happened. And, we are not in any way, we are quite indicative of that. And we've been seeing that kind of growth in our business as well. There is a little bit of what you talked about, Sonia. There is a little bit of a wardrobe reboot, refresh. You're just, even if your shoes aren't, if nothing's wrong with them, you're just sick and tired of seeing them in your closet for 2 years, so you're ready for some new shoes. And like Kunal said a little bit earlier, they're forecasting record weddings this year in the history of India. And as you know, Metro and Mochi are two flagship brands, cater very deeply to the wedding and festive section. So, we are quite optimistic about how things are looking currently and going into the future.
Mr. Joseph, one common theme across the board has been the rise in input prices, but I don't think we've spoken with a shoemaker specifically. Could you tell us what are you seeing in your business on the side of inputs?
Sure. So I think we're not immune to the input costs rising, and as they rise, so will we. I think one of the advantages Metro has is we do a lot of our sourcing domestically. So a large portion of our footwear is made domestically, which helps us avoid some of the logistical increase in input costs that if you're importing a lot of your products. So that's number one. Number two, we kind of forecast this a little bit earlier in the year. At the turn of the calendar year, we actually were seeing raw material prices increase. So we forecasted this and have done some forward-looking buys to hedge against it a little bit. Of course, that hedge cannot last forever. You don't want to hedge inventory forever. So I think we're not immune to it, but at the same time, I think we can manage it by trickling those price increases to our consumers at a bearable and sustainable rate.
When you step into a mall or into a store, it doesn't feel like inflation is at a 4-decade high. I mean, irrespective of which way oil prices are going, irrespective of which way food prices are going, people are out there and buying hard. Kulin, you agree that even if you go ahead and give price hikes, it may not impact consumer sentiment that much?
Yeah, so this particular season definitely saw close to a 10% inflation in prices in our category, which is apparel. And so far, we have seen that most brands have passed on those prices. And as of now, we are not seeing a demand erosion. There could be another slight price hike in the autumn winter season, which is post August, September. I think this particular season, the expectation is that the price hike will be passed on. We'll have to see as the year progresses how this inflationary trend, whether it sticks, it increases or decreases. I think it will be a little difficult to predict. But as of now, you're right that the prices have been passed on and absorbed in the market.
For you, Kulin, could you tell us what is the, I mean, our cotton prices, for example, I mean, everything is through the roof, right? So you're saying at this stage
Yes.
it doesn't impact, but how is FY23 going to look if prices hold at these levels?
So cotton is at its highest ever. And as I mentioned, it's been, whilst the cotton has almost doubled, for our particular price point, the price increase to the consumer is around 10%. And that has, as of now, got absorbed. It's a very difficult to predict where cotton is headed this year. There has been an issue of cotton scarcity all over the world. So it'll be difficult to predict a 6-month trend. But as we speak today, at least in the mid-premium price points, the prices have been absorbed. There could be some pressure in the value part of the market where price sensitivity is a little higher. But at least in the mid-premium and the higher segments, the price has been absorbed in the market as of now.
Okay. And Mr. Joseph, what about you? How much has the price up move been for an industry like yours over the last couple of months? And how much has been absorbed by the industry, by the consumer already?
Right. So I think we're a little bit of a laggard industry because a lot of our products are petroleum based. But like I mentioned, a lot of our products, Sonia, are domestically sourced. We did announce earlier on that we would be seeing about a 3 to 5% price increase through the quarter. And we've kind of held to that. We're not seeing anything significantly greater than that happening yet. But we think, as Kulin shared, we think that'll continue, that 3 to 5% will continue into the next quarter and to the future, because we don't see these input costs going down. But India as a country is pretty resilient to these things. Don't forget, whether it's inflation or prices or crude or input costs going up, we've also had to battle deflation of our currency over the period of time, the demonetization effect. India has a way of battling through these things and coming out on the other side well. So we continue to remain optimistic about where we're going with things.
By the way, Sonia, there's one more shoemaker getting listed. Campus Shoes is coming up with an IPO, and I think the management joins us later this week. Mr. Joseph, just a quick word on competition in terms of organized, unorganized. I mean, what have trends been like over the last 6-12 months, and what is that doing to pricing power for established brands like you?
So I think one of the changes that happened in our footwear industry was the change of GST for goods under 1,000 rupees. Fortunately, Metro had less than 13%, or right at 13% of our inventory in that price range that had to see that price hike as it went from 5% up to 12%. But what it actually did was start to make organized retail a little more competitive with unorganized retail. So the unorganized retail segment is the largest segment today in India, with organized retail being at right about 30%. If we start seeing that shift go from unorganized retail to organized retail, we believe that Metro is well poised to take advantage of that. So when you look at the competitive landscape, it's not just the players in the organized space, it's also the market drivers that push people from the unorganized sector into the organized sector for footwear, especially with the new GST change.
It's interesting, that Prashant brought up the Campus Shoes IPO. They're largely into, of course, apart from sports shoes, into athleisure as well. And a huge part, 20% of their business comes from the digital channels, the new age digital channels. So, Kulin, I wanted your thoughts here. I mean, everything's moving digital. There's so much disruption happening there. For your apparel brands, now what is the digital contribution? How much has it gone up by over the last couple of months? And are you making any fresh initiatives there, any fresh investments that you'll be making to sort of, streamline processes or increase contribution from that channel?
Yes, so Sonia, as you rightly said, the digital channel had a massive reset due to COVID, and For most players, digital became the center of gravity. For us, we have had digital as a central theme for many, many years. In fact, it is now more than 25% of our overall sale. And it continues to outpace the growth of every other channel. We've kind of built a whole omni-channel model where all of our stores are now integrated, in a sense, to the online demand. So the stores have also become omni-channel fulfillment centers. We have pivoted our online business into being an online for online, which means both the product sold and the supply chain has been designed to optimize for online as a channel. So no longer is online an additional channel. I think it is one of the core channels moving forward. And it wouldn't surprise me if year on year, the share of digital as a channel will keep going up for every brand company.
Okay, well, the consumer is back, and how? That seems to be the moot point. Mr. Joseph and Kulin, thanks a lot for joining us, and hope you make up for all the lost time and money over the last 2 years. It's been a challenging last 2 years. Hopefully, things are back with a bang. Let's slip into a quick break.